So, good morning. Thank you for joining us today. My name is Seonyang, and I'm professor of Dongguk University. It's my honor to privilege to moderate this session with Richard Tang, which is CEO of Binance, the world's largest crypto exchange, with more than 280 million users. I don't think he needs more introduction, but let me introduce him a little bit. With his 3 decades of experience in regulation and financial industry, have made him one of the most influential leaders of digital assets. So thank you for joining us here today, Richard. Let's start with some reflection of the past 10 years. So just in one word, how do you describe the past 10 years of digital asset?
Before I go to your question, I just want to say hi, Korea. 안녕하세요. I'm Richard Teng. To all the distinguished leaders, to the organizers, thanks for having me here today. Thanks for the invite. And I'm very excited to see all the huxing in the crowd. Very nice to meet you. These are the leaders of the future. But back to your question. I would say the past 10 years, we have gone from niche to mainstream very, very quickly. So I think this crypto is a very unique asset class. If you look at stock, bonds, commodities, FX, it always starts from institution embracement. Institutions always are the one that invest in those asset class first, then it goes down to corporates, high net worth individual, and then retail. Crypto, on the other hand, is the only asset class, if you think through the history, that's embraced by the retail for the longest period of time. And it happens because after the 2008 global financial crisis, the Lehman crisis, people became disenfranchised. Why do we have all these financial crises, financial institutions problem happening regularly? And Bitcoin was formulated then as the first peer-to-peer transmission system, payment system, that disintermediate the intermediaries. And we have seen that embracement. And for the longest time, corporates, institutions was pushing back to say that this doesn't work. But we have seen a sea change, especially in the last 2 years.
I see. So niche to the mainstream really capture the spirit of the past 10 years of digital assets. So what do you see as the biggest achievement of the industry and the biggest setback of the past 10 years?
Well, I think in the early days of any industry, it's not only crypto industry, when things are developing very fast, you tend to have problems. It's just like, if you remember, for people old enough to remember, the dot-com bubble. You have plenty of exuberance, you have plenty of ideas, and not all the ideas will work. And that's similar to what we see in crypto. You have plenty of ideas, including Lunar Terror. You have plenty of some bad actors, I would say, within the industry. But I would say that with mainstreaming of the crypto industry, with institution adoption, with clarities of rules and regulation, the landscape has changed quite significantly in the last 2 years. And the direction of travel is very clear. The way forward is much more institutionalized, is much more compliant in nature. So from here on, you'll see much more sustainable growth for the crypto industry.
So that's a valuable perspective. Of course, not all moments are positive. Like events like FTX and Terra shook the world. They damaged investors' confidence. So since then, what has the industry done to restore investors' confidence?
Well, I would say that industry has gone through a lot to try to restore confidence. And I'll explain to you why, right? So I became involved in the crypto industry around 2017. And that's the year I got to understand crypto. I know about crypto in the United States at this forum called Boca Raton Forum. It's a Futures Industry Association's meeting. And every year, the global exchanges, the global regulators will be there. But that particular edition, for me, was interesting because I see a lot of crypto players coming through. And the more I talk to them, the more I discovered that, hey, this technology can solve a lot of pain points globally. And I've been involved in financial services by now for more than 30 years. From day one, central bankers and financial institutions said we need much more financial inclusion. But even today, we have 1.4 billion people in the world that's unbanked. That's not part of financial system. They don't get access to banking system. They don't get access to payment system. So it's still a big problem globally. I say, hey, it actually solved a lot of problems, which is why there's a lot of retail embracing this, right? So the financial inclusion is a big one. And we continue to build from that. I would say that the growth aspects of it, the sustainability of the aspects of it, is driving all these changes. But also, crypto, because it's a technology and it's a transparent, open platform that's immutable, unlike books where you can change the records. This technology is immutable. Once you do a transaction, it's on public blockchain, everybody can see what you did, you can trace it. So we are able to do a lot of things, even where regulators don't impose that on us, because as you know, many of the rules and regulations around the world are still evolving. So many of these things that the crypto industry has done are not what regulators impose on us, but what we do to make sure that we give the transparency to users. Give you a few examples. I will speak on behalf of Binance. We are the first exchange to come up with what we call proof of reserves. So financial institutions can't tell you where your assets are. We can. We publish proofs of reserve regularly to tell user assets are backed one-to-one on our exchange. We, even though regulators don't ask us to do it, we set up a 1 billion SAFU fund. SAFU is a short form for Safe Assets for Users Fund. So 1 billion US dollars, we set it aside, is on public blockchain. Everybody can verify that. In the event of security issues, those funds stand ready to compensate users. So we have done a lot of things beyond what traditional financial institutions can do and what regulators impose on us to do. So all those things are efforts by the industry to bring greater certainty efforts to all, right? And regulations are still now catching up, are still not quite there yet.
That's very impressive. So, but there's another big challenge we face. There is a natural conflict between decentralization and regulation. So, how can you find the right balance between them? So, that is my question.
I don't think there's a conflict, right? So if you look at the decentralized nature of blockchain, it's transparent, it's open, it's immutable, it's permissionless. I think that facilitates many different things. So if you think about why President Trump of the United States make it his agenda to make the United States the crypto capital of the world, the AI capital of the world, because he firmly understood, and his administration firmly understands, that these are the two technologies that will drive every economic sector going forward. So every economic sector will be built on AI, will be built on crypto and blockchain, right? So it's extremely important. So on that front, what we have to do is harness the decentralized nature of the technology, but there are centralized players like ourselves, which we operate within the financial services sector. So we're subject to all the rules and regulations that government impose on us. So we are centralized in that nature. We do know your customers, we do AML transaction, we do market surveillance. And the beauty of centralization in a decentralized environment is also this. There are customer service officers that you can call if you run into problems with your account, if there are challenges, if you transfer money wrongly. Even though it's not our obligation and many other exchanges don't do it, we try to, if you transfer your funds wrongly on a different chain, compared to what you're supposed to do, we'll try our best to try to recover those funds for you, right? So we go beyond the call of duty of what many others do. And we work with law enforcement agencies globally to fight illicit crimes, right? So there are beauty of being a centralized model in a decentralized model because we offer many of the advantages that both worlds bring about.
I see we can find the right balance according to your opinion. So we reflected on the lessons of the past. So let's move on where the industry is headed, especially the global wave of regulation. Richard, so among the US, EU, Dubai, Hong Kong, Singapore, these major markets. So what makes their regulation different? And are there any policy model that you find impressive?
Okay, so just to preempt this, every country will have its own policy considerations. Every country has its own regulatory considerations. As participants, we have to be respectful of all the countries' regulations, policy considerations, and what the regulators have in mind. I'm an ex-regulator, so I have to say this from Singapore. But I work with many regulators around the world. I would say the best regulators are the one that formulate smart regulations. What do I call smart regulations? Smart regulations are regulations on the one hand that understand the risks of a particular asset class, a product, or industry, and manage those risks. But at the same time, support the growth and innovation of it. Because if you think through it, regulators, by their nature, by their construct, are not incentivized to support growth. They are incentivized to manage risk. But if you just look at managing risk to its extreme form, you're not going to have much growth. Because the easiest way is not to have, take zero risk, you're not going to see any growth, right? So to me, the best regulators around the world that I see and I work with are the ones that support these two dimensions. Both the risk dimension, manage that risk, but also support innovation and growth, right? So any regulators around the world that can do that will be very, very good for the economy. They're going to bring in a lot of foreign direct investments. They're going to support growth within the financial services sector in a sustainable way. And they're going to bring in a lot of talent pool for those economies, right? So I work with different models. I would say at this point in time, just on crypto alone, I can't say for the rest of the asset class because every country, every jurisdiction have their strengths. But just on crypto alone, I would say the Middle Eastern regulators are pretty advanced
Nice.
on that front. So I was CEO of Abu Dhabi Global Market Financial Services Regulatory Authority. And in 2017, we became one of the first in the world at that point in time to start regulating the crypto industry. So you see Abu Dhabi, Dubai, Bahrain, quite ahead of the curve in terms of embracing smart regulations for the crypto industry.
I see. So we right now understand that Binance is focused on regulatory collaboration. So could you tell us about the time when with working with the other like regulators really paid off and led to the positive outcome?
Yeah. So by now, we are the most regulated exchange globally. So we are regulated in more than 21 different countries and jurisdictions, right? So from different parts of Asia Pacific, including Japan, to different parts of Middle East, North Africa region, to Europe, to Latin America, such as Brazil, Argentina, Mexico. So we operate a global platform. As you mentioned, we have about 290 million users globally, and that growth has continued to grow very quickly. We started 2024 with 170 million users. So in a span of 1.5 years, we added about 120 million new customers onto the platform. So you can see the growth trajectory is very, very strong. But as I said, for the early adopters within crypto, they may not need the certainty of law and regulations. But for mainstreaming, for institution adoption to come true, and this has been my hypothesis since 2017, right? So my hypothesis in 2017 is it was a very niche asset class. Crypto adoption was less than 1% in 2017, very early stage of development. But my hypothesis is for this to go mainstream, you need first clear rules and regulations, and then secondly, you need institutional adoption. If you have these two elements, this asset class will go mainstream very quickly. And I saw both those elements come into play at the beginning of 2024, right? Firstly, more and more countries around the world are trying to formulate new rules and regulations to regulate crypto. Having said that, only 1/3 of global regulators are regulating this space today. So 2/3 are still deliberating, still formulating. Secondly, in the US, they started to approve ETFs for crypto. And many of the institutions, the likes of, it's quite famous, JP Morgan was, for the longest time, Jamie Dimon was a crypto skeptic, was very against crypto. Larry Finn from BlackRock said he was a crypto skeptic for the longest time, didn't believe. But in 2024, all those start to change, right? So Larry Finn, BlackRock say, hey, I'm a believer, I'm a supporter, I know the technology now, I spend enough time to understand it. And many of the financial institutions all follow suit, right? From BlackRock to Charles Schwab to Fidelity, etc., etc. So if you look at the top financial institutions around the world, all of them have a crypto agenda and strategy. Set up their own trading desk to start trading it, offering to their customers. And that momentum continues, right? So you see family office, you see sovereign wealth funds all starting allocation into this space. So the growth trajectory is very, very strong. So those two elements are important. So the direction of travel is very clear. For me, mainstreaming started in 2024. Momentum carried forth to this year very strongly with all the treasury companies that's being set up to hold crypto in the United States and in many other capital markets around the world. You have corporates allocation. You have, in the US, endowment funds as well as pension funds, 401k, being allowed to invest into crypto. So that mainstreaming has happened, and today we're about 7.5% crypto adoption globally compared to 1% in 2017. But from 7.5% to 20%, that will come very quickly from now on.
Wow, that's really fast speed. So actually, the second part of the session, we are going to talk about institutional adoption. So let me stay on regulation a little bit more. So let's talk about the global versus local regulation. So you just told us that Binance is operating with 21 jurisdictions and operate globally with its own global standard. So my question is this. So how do you manage global standards and local needs?
So, if you look at rules and regulations on money laundering, on know your customer, know your business, on transaction monitoring, market surveillance, they are all pretty established by now globally. So what we have is a standard set of global rule books, right? Policies on all these different areas of compliance. We invest very heavily into compliance. We have more than 1,400 compliance staff on our platform now, accounting for about 22% of our total global headcount for Binance. So we emphasize a lot of that. On top of that, we use AI to really harness the job of our compliance department to improve their effectiveness and accuracy. So we do global standards, but with local chapter, meaning because every country might have certain different requirements over and above global standards. So we have to respect those local rules and requirements. So what we do is where there are additions to add on, the local general manager, the local money laundering reporting officer will have to incorporate those into the money laundering provisions, the know your customers provisions, know your business provisions, and make sure that we comply with local requirements. Right? So I believe that's how most of the financial institutions operate around the world as well.
Yeah, that's good answer. So we talk about global versus local. So that brings us another challenge because there's some countries with uncertain regulations, right? So what is Binance strategy when entering new market with uncertain regulations?
So it's very simple, right? So I always tell my global team, in terms of local regulations, if you can do three things right, you'll be successful. What are the three things? Firstly, strong engagement with policymakers and regulators, right? Because you need to know what the regulators are concerned with, you need to know what the policy considerations and direction of a country. I think that's the first strong engagement. The second strong engagement is business, community, media engagement. Because you need to, we, as with any firm, will need to partner locally with the financial institutions, with the banks, with the payment providers, with the media, to understand what are the local preferences, what are things that we can do in terms of partnership locally. So that's the second engagement that we need to do and do well. The third engagement is with our users and potential users. What are their needs? What are their preferences? What's the local culture? What are the gaps? What are things that they want that local providers are not giving to them? And these are areas that we can do very differently. And we always stress that users are the reason why we exist at Binance. So users are the front and center of everything we do, from security to compliance to asset protection to having the best product features for them. So we place users at the heart and center of everything we do. So if we can do these three things engagement right and meet all the requirements and all the needs of the local market, we will do well.
So far, we covered about regulation. So let's move on the rise of institutionalization. And we are clearly seeing the institutional adoption, such as crypto ETFs, and growing interest from the global banks and global asset management firms. So how will institutional money inflow change the industry?
Well, so I always view this as a positive force, right? I do know that crypto purists to say, hey, institutional money may distort the nature of crypto. I don't hold that view. I hold the view that if you look at the narrative in the past, people say crypto is volatile. I can explain to you why crypto is volatile. When the asset class is just embraced by retail, when it's a much smaller as market capitalization in terms of asset is always going to be volatile because there's only one category of investors, retail, right? And if it's a 100 million market cap asset compared to a 1 trillion, compared to a 10 trillion, compared to a 100 trillion asset class, you can always be assured that a higher market capitalization asset has much less volatility. So institutional funds and institutions are also different in terms of their trading strategy. Some are buy and hold, corporates. Some are people that trade. Some people use it to hedge, etc. So they engage in different strategy. And we need people with different investors with different duration coming to the market. Because then it makes for a much broader marketplace. People with different horizon, different dimension, different trading patterns. The asset will become much less volatile in the first instance. And secondly, because the asset size continue to grow from the institutional base, and many of them are long-term holder. You can see the price movement of crypto. Now is in some instances is less volatile than equities, some would say. So you see the maturing of crypto. So the past narrative that crypto is volatile does not quite hold with all the institutions coming in. So it is building a different base for investors of the asset class.
So institutional money inflow will stabilize the market volatility. So it is important. So let's turn to institutional investors' perspective. I think they will join the market confidently only if certain conditions are met. So what are those must-have conditions?
Well, so for institutions, they always look for, firstly, clear rule and regulations, right? So many of the institutions are governed by rules and regulations. They are licensed in the respective countries. So the local regulators must allow them to embark in that business. So many global financial institutions are now embarking in a very aggressive fashion into crypto because of the clarity provided in the US. So under President Biden's administration, that was very anti-crypto. So you see the financial institutions not coming anywhere near crypto. There was a debanking situation for the crypto industry. Under President Trump, who is a pro-crypto president and a pro-crypto administration, he has given a lot of clarity. Instead of doing regulation via enforcement, meaning you sue people under President Biden's administration, go to court, let the court decide where the rules are, which is, in my view, the worst form of regulations. As an ex-regulator, I can say that. Because as regulators, we have the ability to write rules, provide clarity to the industry. Why don't you do that? And why do you need to go to court to prove your case? Right? You are wasting taxpayers' money on that front. So President Trump has made it very clear, hey, we need clear rules and regulations, came out with the Genius Act, provide clarity on stablecoin, or now the global financial institutions are now rushing to issue their own stablecoins because of clarity provided. Clarity Act, what are the rules governing crypto and what are the rules not governing crypto, right? So all these provisions will have a big effect on the entire industry. And US being the largest capital market, the largest economy on the world, what the US does, the others will have to sit and take notice. Because if you don't follow suit, you'll be at a competitive disadvantage. For example, if all the financial institutions in the US start to embrace crypto and local institutions don't, then you're at a competitive disadvantage compared to the US financial institutions, right? If US as the largest capital market start investing into crypto and you don't, you lost out on a key asset class, a future asset class that's going to grow very quickly in the world. Same for AI, I would argue. Right? So anything the US does, the rest of the world will take notice. And because the US has set aside crypto as a strategic reserve, many countries around the world are now considering, hey, in terms of my sovereign wealth fund, I should do some allocation into crypto as well. So it has an outsized influence on the rest of the world.
Thank you so much for your insightful answers. It's kind of related question. Let's talk about the strengthening global standards as anti-money laundering and terrorist financing rules intensifying with the unified know your customer checks. Do you think that is gonna be opportunity or challenge for the industry?
No, I don't think so. I think that, as I mentioned, the rules are pretty standardized globally by now, whether it's money laundering or terrorist financing, right? But what I would like to see globally is harmonization of crypto rules and standards. Why do I say that? We operate in 21 different countries. We are going to be regulated in many more countries as and when the rules are being formulated. Unlike rules in banking sector, they are very established. You have Basel standards. Rules in securities industry, you have ISCO, that's the standard setter. In crypto industry, there's no uniform rules. So every country that we go to, the rules are different. And that makes it very difficult for global exchange like ourselves to really change our operations, change the setup to comply with local standards. Because if you're an asset management company, you are a securities firm, you go from country to country, the rules are very, very similar today, right? And you don't have to change much. For us, everywhere is different. Some countries regulate crypto as a security. Some regulate it as a commodity. Some regulate it as a payment token. Some regulate it as a different asset class called virtual assets or crypto assets or digital assets. And the rules are totally different. They sometimes can be conflicting. And that makes our life very difficult. So I hope to see much greater harmonization among global regulators on that front. Secondly, I like to see level playing field between traditional financial institutions and crypto players. In crypto, we are subject to the FedF travel rule. Any 1,000 transfer, you have to do origination and beneficiary information. That is not imposed on traditional financial institutions. Why the unlevel playing field, right? Why is there a different threshold? Can we have the same threshold for all institutions around the world? And that's to be fair. So those are the things that I like to see that will enable crypto to even grow in a much faster pace.
So you think that strengthening global standards is going to be more opportunity for the industry. That's great. So we are now coming to our final theme, the cooperation between regulators and industry. So how should the regulators and industry work together for fast and safe growth?
Ultimately, the regulators and the industry have a common interest, which is to protect users, right? So the interests are aligned. You're coming from just slightly different angle. So industry, even though is try to protect users and give users what they want, they are much more concerned about growth. For the regulators trying to protect users, they are much more concerned about risk, right? So what we need to do is to bring them together to have dialogues to see the two different dimensions. But ultimately, it's all about user protection, safety, security, compliance, product features. And until now, I would say that a lot of global regulators in the crypto industry are ignoring two things. They essentially look at AML, KYC, terrorist financing, which are pretty standardized globally by now. But they fail to see two other important factors. Security. You have seen hacks of exchanges globally. Many exchanges, especially smaller ones, don't have the financial resources to invest heavily enough in security to safeguard user assets. So every time I see regulators, I say, look, it's good. You just focus on one aspect, which is the AML, money laundering. But a lot of you fail to look at what are the security features that this exchange put into place to protect user assets, right? You can have the best AML, but if the user assets get lost, that's it. That's the end of the story for users and for those exchanges as well. And you see many hacks throughout the course of last year and this year. This year, there's a very big hack on Bybit, 1.5 billion, right? So security is an underestimated area by regulators. The other underestimated area, in my view, is allowing customers to tap global liquidity, right? Why do I say that? I mean, Binance, we have a bit of vested interest when we say this, but it's also true. If you look at any market, equities market, bond market, they have a responsibility in terms of best execution. What does best execution mean? Meaning you have to source the different platforms to make sure that you give the users the best price in terms of what they buy and what they sell, the narrowest bid-ask spread. Because by having the narrowest bid-ask spread, users will save substantially trading over the longer term, investing over the longer term, right? The lowest amount of slippage. But this is an area that regulators have not spent enough time. And Binance being the exchange with the deepest global liquidity, with the most number of users, including most number of institutions by now. We offer that narrowest bid-ask spread. And it allows the users to save substantially over time, including institutional users, by trading through our platform on a 24/7 basis. If you trade through equity market, operate 5 days a week in most instances, morning 10 o'clock to afternoon 4:30 maybe, there's huge liquidity risk. If there's a market event, you can't liquidate your holdings, you can't take position, you can't hedge your current position. Crypto never sleeps, right? So liquidity risk, security risk, and allowing users best execution are some of the areas that regulators have not spent enough time on, in my view.
I see. Sounds like there's so many things we can learn from Binance operation. So, looking ahead 5 years, so what is the top opportunity for the industry, and then what is the top risk ahead?
I would say that 5 years is a long time in crypto. Things are evolving very quickly. So every day I see new innovation coming through on the crypto front. Different new teams start to emerge, right? So if you step back in 2024, you will not see 2025, all the big crypto companies starting to get listed in the US, and the usage of stablecoin moving so quickly, usage of crypto payment moving so quickly. So it's very difficult to envisage because innovation is happening so quickly and embracement, adoption is happening very, very quickly. So I would say that as long as we focus on utility, on innovation, on making strong use case for different industry, including financial industry, to solve people's problem, the use case will continue to grow and the usage of crypto will continue to grow. In 5 years' time, we will not be having this subject about crypto because it's going to be part of everybody's daily life. It's like AI, you won't notice it anymore. It's part of your daily life. What are the risks? The risk is we don't get there. What is stopping that? Lack of rules and regulations. If the government don't support, you're not going to have some of this development, right? If you don't manage some of the risks well that I mentioned just now, security risk, how do you protect it, asset safety, users, funds, etc., you're going to have some setbacks on that front. So it's very important that anybody that wish to be involved in this space get educated. We always say, before you invest, do your own research on that front. Don't listen to hearsay. Don't listen to just what celebrities say. It's your own money. Be prudent with your investments. Do your own research. But we'll get there very quickly because if you look at it, the largest economy of the world are embracing it. The largest financial institutions are embracing it. As a technology, you will continue to advance. You can't take the genie and put it back into the bottle. The genie is out of the bottle now. So innovation is going to happen at a very quick pace.
So it's kind of related because we have so many students which is going to be future leaders. So how do you predict the price of Bitcoin in 5 years? And are you recommending to invest Bitcoin for them? So.
I'm not in a position to give financial advice, but for anybody following me, at early 2024, when people ask me about my Bitcoin price prediction, and at a point in time, Bitcoin price was about 30 to 40,000 US dollars. I said that I see by end of 2024, Bitcoin price will exceed 80,000. And I have basis for that because I see strong momentum from the ETF approval to governments introducing new framework on that front. But I also said last year in 2024, even though 2024 is a good year, I believe 2025 is going to be a better year. And because the macroeconomic situation is evolving and with much more momentum, and also you're probably going to see an interest rate cut this month, right? And a lower interest rate environment is always good for an asset class such as crypto. So I would say that the momentum is strong. I remain bullish. I won't make a price prediction this time around. But for any asset class that you invest in, whether it's equities, commodities, FX, or crypto, you always look at fundamentals. You always look at long-term trend. You look at momentum and where people are embracing it. So if you see all this strong momentum, you know that the direction of travel is still going to be bullish. Having said that, there's going to be short-term volatility. There's going to be drawbacks. There's going to be no asset class is going to increase forever. That's a fallacy. Right? So be prudent with your investments. You'll go through ups and downs as with any asset class. So just do your own homework on that front.
Thank you. So I hope it helps you guys. So I think we have more time, so I can ask a question about tokenization. So do you think the tokenization will shape the financial industry next decades?
I agree that tokenization will do so. I can explain to you why. I'm not quite sure what's the settlement period in Korea when you trade equities. Is it T+0, T+1, T+2, T+3?
I think it's T+2.
T+2?
Yes.
So you take 2 days to clear and settle the risk, right? So you trade today, you pay and settle and clear 2 days later, right? If you think about it, why do you need the T+2 settlement? With today's technology and in today's environment, crypto trade instantaneously and clear and settle instantaneously. It is atomic settlement, right? In traditional finance, you still have T+2. Why do you need all these inefficiencies? With the usage of blockchain and AI, once you do a transaction, everything is immutable. You can't reverse it. You should be able to eliminate all the clearing and settlement risks, right? And tokenization allows you to do that. It allows you to also build in smart contracts. So you look at today in most financial institutions, you have a lot of staff in the middle and back office. What do? They do clearing and settlement. They do reconciliation. Or who trade what? This is supposed to go to who? Is it correct? All those things will be replaced by AI and blockchain, right? So if you look at it, the future world, the future financial architecture is going to be built very differently from what you see today. I believe T+2 is going to be a thing of the past as we embrace all this new technology coming through, right? So tokenization is one way to bring about that. So like it or not, most of the global big financial institutions, they are embracing tokenization. because it's their way to really make things much more accurate with the usage of AI and blockchain, eliminate all these checkings, reconciliation work that is taking place over the course of 2 days is much more effective and efficient. And it offers them a product on their app, on their platform, 24/7. Right? Once you tokenize a product, technically you can offer it on the 24/7 platform, right? Because you're not subject to working hours of a financial institutions, 9:30 to 4:30. Don't work on weekends, don't work on holidays, there's summer break, and so on. So there are beauty to tokenization, and I see financial institutions as well as corporates embracing it.
So finally, Richard, this is my last question. So if you could leave one message for a digital asset and the path forward, what would it be? So what is your last message you want to leave for them?
I would say that we are still in a very early stage of development in crypto. I see many young minds, and I would say that the Huxing is going to be much better than all of us in terms of their understanding of blockchain, crypto technology, as well as AI technology, because it's second nature to them, right? And I understand some of you are 16, 17 years old. So the future is extremely bright for all of you. Keep building. You have a fantastic future ahead of all of you. For the rest of us, learn as much as we can. We're going to have an exciting crypto future as well. Thank you so much for your time. Kamsahamnida.